How can you re-enter your trade right after you get stopped out? In this video, we are going to cover that together. Hey, what's up with you guys? This is Arfan here with smartaincubator.com and welcome to another video. In today's video, we are going to go over our special method for re-entering your trade right after you get stopped out. So I have 3 examples here for you on GBPUSD on a 5-minute time frame. And right after watching this video, I can guarantee you that you can have a better understanding of re-entering your trade if you get stopped out. So without any further ado, let's get into it right now. So first of all, I have a question for you. When do you usually re-enter your trade? Do you even do that? If you don't do it, drop your comment below this video. Even if you do it, let me know what your strategy is. This is my strategy that works, pretty well most of the times because I mostly use supply and demand strategy. I don't really use, support and resistance, like in very, very rare cases, but I mostly use supply and demand. So our first example is going to be this one. If I want to do a replay mode, you see, for example, this one, we had a huge spike here. We clearly have a gap exactly from here to here. It's a high probability order block. It's a low probability order block because we have a shadow here which is outside of this box. I have a separate video for that. It's my first video on my channel. But anyways, we are gonna remove this order block here. We had a huge spike, and then we had a little bit of correction, and then the price broke the previous high, which is this one. So we had this bullish engulfing candle, like a huge spike, correction, continuation, break of a structure. So in this case, a lot of traders, like breakout traders, put their buy limit or buy a stop here, and they put their stop loss underneath this candle, and they usually leave a runner. I personally trade 1-to-1. It's absolutely enough for me. 1-to-1 risk reward ratio is totally enough for me, but some traders want to leave a runner. For example, they want to they want to take it from here to right here, and they put their stop loss exactly underneath. But if you do that, like in most cases, I personally don't do that because I wait for the price to break the previous high or the previous low and do a little bit of correction, and then I take it. So this is called a break and retest strategy that sometimes I use it in my strategy. So but for this one, if I want to go forward, you see that the price is kind of going towards upside, and now it's trying to calm down. So some people just, as I said, when I take a 1-to-2, 1-to-3, 1-to-4, if someone wants to take a 1-to-1, they probably can close their profit here, which is 1-to-1. But let's say that some people want to leave their runner here, and then after that, if they want to leave a runner, you see that they immediately get stopped out exactly right here. They actually get stopped out because this candle broke outside of the order block. Can you see that here? And because of the spread, you get stopped out easily. So in order to prevent that, you need to understand where your order block is. So this is a regular break and retest strategy. But after seeing this correction right here, where is the next candle that had a huge spike? Apparently this one, right? Let me just try it here. This one right here. Okay, and you gotta identify if it left a gap or not. So we can see that we have a very strong order block right here, which is a low probability order block, but it still counts as an order block. And if I want to do it here, you see that it actually tapped into this zone right here. So after seeing this zone becomes invalid very, very fast, and you need to re-enter your trade right after seeing this candle. You can either take your trade here and close your profit after taking a 1-to-1 risk reward ratio, but if you want to leave a runner and you get stopped out here exactly below this block, which is right here exactly, see, then you gotta stop out here. You gotta identify the order block. You gotta pay attention to the candle that you see exactly right after what happened, and because of this indecisive candle, and it's also a green candle, we have the second green candle which is exactly on the support, that makes it more stronger and it gives us more confirmation to take a long position. And we can easily take our long position from here to here. We put our stop loss here, TP here, boom, then you can easily take that. See, it's super simple. So you gotta see what momentum the market wants to give you, and then based on that you go ahead and we just take your trade. So the second example that I have for you, which is very important, and it's using a smart money concept strategy, is this one here. After this huge spike, we can see that we have a very obvious gap exactly in between with this order block. Between this order block and this candle right here, there's a huge gap. This big candle actually left this gap, and we have our order block exactly right here. So this is our order block, this is a gap here, and the next thing you need to do is just wait for the price to tap into this zone, and then you take your buy position. So the second thing, the next thing that can happen is that people see that, they wait for another momentum, and then boom, it spiked up. See, exactly from here to here. But if you want to leave a runner again, and you're a swing trader, you definitely don't want to close it here. You definitely don't want to just close a 1-to-1 risk reward ratio if you have so many gaps in 1 hour time frame. See, in 1 hour time frame, we might have so many gaps. Exactly on the left side, we have so many gaps. See this huge space here. Some swing traders want to grab all the liquidities from this area here, so they definitely don't want to close their trade that early. So we assume that you want to leave your runner, and you kind of want to take it from here. You put your stop loss here. We had a huge spike, and then the market is trying to come down, boom, and it stop you out. So the next thing you need to pay attention if you want to re-enter your trade is this one. Is actually what I'm gonna tell you right now. You gotta see if the order block is broken or not. Is broken or not. So what I mean by that is that this order block here, if you want an order block, if you want to see if an order block is valid or not, you gotta pay attention to the price action. Did the price break the order block or not? So for example, if this green candle breaks out of this order block, it immediately makes the order block invalid immediately. But since it's in the middle of the order block and nothing is going on, we still have a high chance to re-enter our trade, and then we can leave a runner, and this time we can put our stop loss underneath this order block right here. See what I mean? Because even this one is a really good candle in the order block, and it's a very good indicator that it might go up again. But I'm just saying that since it's not broken out of this order block, it's still valid. And if I want to move forward, you see that it's exactly going up. Very, very sweet. And you can leave your runner, or you can close a 1-to-4 trade if it's passing through that. See, very, very simple. Very, very simple. And as the price is going up, it's leaving so many gaps right here, for example. And we took our trade here. This order block is not valid anymore. But this is very important. If the order block is broken or not. Okay, if it's not broken, I want to show you how. If it's not broken, then you need to wait for a very strong confirmation, or I would say momentum, to go towards the market's direction. So you gotta see if the market is bullish, is bearish, what is it doing? Is it choppy? Is it fluctuating? What is exactly the price doing? You got to pay attention to that. It's very important. Since in 5 minutes we have so many higher highs and higher lows, it's a very, very good chance that like, not a very good chance, to be honest. You should always be trading towards the trend. You shouldn't be trading opposite the trend, because there's a high chance you get stopped out. But right here we can clearly see the market is uptrend in 5 minutes if you want to scalp the market. And we can see that we have liquidity here, we have liquidity here, we have liquidity here. These are all the liquidities that we have right here. So that's why I was talking about buying the market. It's very, very important, guys. We had this huge order block here, we have this momentum right here, we took our buy position, stop loss, boom, smash. And this is our next order block that we need to wait for until it gets filled in, or we wait for this area right here, which could be our break and retest area. See, break of a structure, correction, momentum, probably continuation. But as I said, I'm not a huge fan because so many people buy here, so it means that we have so many stop losses here. Banks and institutions know that, and they probably stop you out. But let's say that you take it here and you put your stop loss here and you want to like close it somewhere around here, 1 to 1. Let's see what happens. See, I told you that you probably get stopped out because we have so many stop losses here, so much liquidity, and they know what you're doing. This is what most of the traders have been taught, to see the break and retest pattern and take their buy position here. And we got to see how long it takes until it reverses. It's probably trying to reach this level, or it's probably going up right now. So let's see what happens here. We have a momentum here. Boom. See, break of a structure, correction, momentum again. If you take your position here, put your stop loss here and take a one-on-one trade, let's see what happens. Again, stop you out. That's what I'm saying, guys. It's very, very risky to trade break and retest. It's way better to trade order block, but in this case it still hasn't touched the order block, and I need to kind of draw it down from here. There's a still gap in between. It's still not tapped into, but break and retest is very, very risky if you want to trade it. So this was the definition of re-entering your trade. I wasn't prepared for this one because, you know, this wasn't part of the analysis that I wanted to show you. And the third example that I have is exactly right here. It's a very cool one because I'm gonna show you why. So if you pay attention to this side right here, you see that we have a huge gap in between, because after this bearish engulfing pattern, bearish engulfing candle, it left a little bit of gap in between, like between the order block and the next candle right here. So what would you do? Waiting for the price to tap into this zone and take your sell position. Some people put their sell limit here, their stop loss here, and they TP here or here, whatever. I mean, some people want to take a 1 to 3, 1 to 4, 1 to 1. It doesn't really matter as long as you're taking your trade here. I mean, that's what I mean. And then their position gets triggered, and now they are in loss, and they probably get stopped out because of this bullish engulfing candle right here. But how would you do that? How would you react to it? Let's say that you wait for this one and then you take your position here and you want to close it somewhere around here and your stop loss is here. You wait for it, you get stopped out. In this situation, the first thing you need to do is just removing the order block, because it immediately becomes invalid because it's broken outside of the order block and is completely invalid. The second thing you need to do is just drawing your resistance level right here, or support level, and then you wait for it. You see this bearish engulfing pattern, and then you wait again. You see that it's rejected one more time. I personally don't trade support and resistance. As I said, it's exactly the same as break and retest. It's risky. I'm not taking that chance. I only trade supply and demand. And right now, if I want to wait more, you see that we have a break of a structure here. So now our previous resistance level has become our support level. We had a break of a structure, correction, it's break and retest again, and continuation towards upside. But you gotta wait for the momentum. But how would you know when to take that trade? It's very, very simple. If you see some such situation that we had a bullish engulfing candle that has a break of a structure and we had the retest and everything, you gotta wait for the previous high to break. Where's our previous high? Is exactly right here. So you gotta wait for this candle to break this previous high, and then you can enter your position. This is the safest mode possible. And if I want to wait for it, you see it's already broken into. I can put my buy stop here, my stop loss here, and my TP right here is 1-to-1 risk reward ratio trade. And if I want to wait for more for it, you see, boom, it tapped into my TP, and I got my profit 1-to-1. Beautiful trade. It's very, very important point, guys. You got to wait for the previous high to break, and then you take your position if you're trading break and retest. So that was pretty much it, guys, for this video. I hope you got some value. If you did, please subscribe to my channel, turn on the notification bell, and give me a thumbs up, because I'm gonna have so many videos like this that you get so much value from. And if you have any question, drop your comment below this video. I personally get back to you and answer all of your questions. And by the way, if you like to trade completely hands-free and gain 8 to 20% per month consistently, go check out smartincubator.com. It's our expert advisor that trade gold on a daily basis. It's a super scalper, and it can potentially give you that percentage in profit that I just mentioned. So again, thank you, have a profitable day, and I'm out.